Good morning. Morning, everybody. How we doing on this beautiful Friday? Hope everybody's doing well. Alex, nice to see you. Guys, welcome to the class. Nice to have you here. It has been busy this morning, hasn't it? Awful lot going on. It's been pretty cool. I've enjoyed the heck out of it. Hope you guys have too. Guys, we're going to go through the routines this morning. Big fan of routines, you know. Every time you set a very specific list of to-dos each and every day, whether it's wake up, brush your teeth, make your bed, eat your breakfast, take a walk, routines make the brain happy. Systems and routines, guys, I'm a big fan of it. So part of my routine is to come to forexfactory.com each and every morning before I open up my charts or as my charts are opening, and I'm looking for news that may make the market go just a little bit nuts. Guys, today at 8:30 a.m. they did the core PPI and the PPI. If you were watching the S&P, it went pretty crazy for a minute. What was pretty cool though is it went pretty crazy and bounced right off of Fibs. So even in those moments of kind of, wow, here it goes, that was your news release this morning. And I want you to see what happened, guys. 8:30 from termination condition to termination condition. If you don't think that these guys know where they want to get into the market, if you don't think these guys know where they want to get out of the market, take a look at this picture. Good morning, Debbie. Guys, look at this. This is textbook everything we teach about areas where the market is likely to stop. Even during a news release, during a panic, look where the sellers gave up. Look where they said, you know what, that's it. We just pushed it right where we wanted to go. Straight to Fibonacci support. So guys, what we are going to do is we're going to figure out how to take advantage of those. Obviously, during news releases, you don't want to be involved in that. Let them do what they're going to do. And when it settles down, we'll look for the advantages. Take out a piece of paper, a sticky note, open your phone. 10 a.m., guys. We have high impact preliminary U of M consumer sentiment. I don't know what that means. And guys, to be honest with you, I don't even care what the news says. I just don't want to be in a position if the market is going to be unpredictable and erratic. If you were in a long position when that news hit, things went south really fast for you. So that's each and every morning coming through. Another news source that you can look at, I'm going to pull this one up real quick, guys. This is the Ninja Trader. This is the trade desk calendar. Every now and then, once a month, your crude oil is going to roll. You're going to change contracts. You're going to go from this month to the next month. Every quarter, your S&P is going to roll. Well, guys, we're in that S&P. The first Thursday of each month is when that S&P starts to roll. This calendar lets you know what's going on there. And then I have a market analyzer taking a look. We've got great volume on both, but it's a little bit split. The 1222 contract is still running a little bit higher volume, but the market hasn't opened yet. We'll see what happens at 8:30. Both are tradable, but if you're trading the 1222 contract on your S&P, guys, I'm trading the 323 contract. I've already pulled that up, and that's what I'm looking at. So our prices are going to be different. Our fibs are going to be different. So if you want to be current with me, you're going to need to roll contracts. Well, fortunately, when you go to the education page and click on Software User Guide, there's a section dedicated to showing you exactly how to do that. Guys, is there anyone in here that needs help rolling a contract? Because if there is, let's walk through it real quick. We can do it together. All I need is for you to raise your hand. If you want to keep it on 1222 today, that's totally cool. Take your pictures, show it. We can do it. But whenever contracts roll, I like to take a moment in class and show you exactly where you're finding everything that you're looking for. Anybody? It's still early. It's Friday. Ninja won't open. Like the entire program, El Samo? I guess your internet is up. Yes. So when you click on Ninja, it won't give you a control center, not at all. It starts but cuts back. I'm not sure what cuts back means, but I'll tell you what, I am going to give you the path. So Samo, go to the Discord and go to tech support. Send Jason a ticket real quick. He'll help you out. It's probably something that he's seen a million times. It's not something that I've seen, but Jason is here, guys. Anytime you have a challenge like this, run it by him. He's pretty incredible. He'll be able to figure it out for you. And if he can't, then he'll direct you towards NinjaTrader to do that. So El Samo, head over to Jason real quick. Let him take a look. Dollars to donuts, he gets you headed in the right direction in virtually no time at all. That's kind of what he does. He's good at it. Sorry, I wasn't much help, but Jason usually is. He reinstalled you yesterday, Ed? Good. Did he put that device on there to keep you from jumping in? Ha! I kid, Ed. I kid. Guys, it's Friday morning. I'm in such a good mood. We're going to have a great day today. When we're talking about rolling symbols, let's do that real quick. Let's pull up from the control center our tools and instrument manager. He took the limitations off. I love it. Get that governor off there. When I bring up my instrument manager, since ES is the contract that we're rolling, I'm going to type ES in the search bar and hit enter. When I hit enter, you can see it's the E-mini S&P futures. And here's my expiration date, 3/23. This is the new contract. I'm going to click the left arrow, and it's going to put it into the list right here, guys. This is the first thing to do. Once it's in the list, you can click OK, and you can minimize. And then if I come to my ES charts, guys, when I'm rolling contracts, this is what I do because it makes it easier for me. I'm going to come up to this L, and I'm going to make sure that the L on every chart that I have in my workspace is the exact same color. What this does is it links the charts. And by linking the charts, when I come over here to this drop down and I highlight ES 323 so that I can roll my contracts, I don't have to do that on each individual chart. If I do it on one chart and they're all linked, it's going to take a second, it's going to recalculate, and then it's going to give you that 323 contract. So that is your let me give you a fish. That link in the room will take you directly to the software user guide where it runs through it as well. And also in the software user guide, really almost anything and everything that you could need with NinjaTrader is going to be in here, whether it is troubleshooting, opening charts, opening workspaces, building charts. You may want to scale. Guys, one of the common things that I see is people have their charts a little out of whack, and they're like, hey, my charts don't match up. What's going on? Anytime you look at your charts, your most current bar is going to have a black highlighted price. That's how you know that you're looking at the most current information. If you ever don't see that, click this white arrow, and it's going to bring you to the most current bar. The other thing is, who's opened up their software and said, man, all I have is Christmas colors. I don't have any fibs, no one-to-ones, no trigger lines. How am I supposed to trade this, Mark? True story, when I started, I didn't read the instructions, and I would sit here and I would squeeze everything up until I actually saw prices, and then I'd pull it down, and then I'd try to break up, it's gone again, and I'd do all this, and it would get kind of silly. Guys, this capital F in the upper right-hand corner, boom. Recenters you. Boom. Gets you right back to most current. These are the things that are good to know, because if I'm taking a trade and I accidentally bump it, I don't want to panic. I don't want to say, oh my gosh, what am I supposed to do? I can't see what's going on. Make sure that you can get things back to where they need to be. What else is on here? Building new charts, applying chart templates, market flow, deleting old charts and templates. Guys, it's Friday. Here's your homework assignment. Start fresh this weekend. Go through. Delete old charts, templates, workspaces. Start over. Get a nice, fresh data, fresh workspaces. John Novak has updated the installers. That's going to take you to that most current contract of the S&P. Guys, this is a great practice every weekend. I've got my wife in the habit of doing this every weekend as well, just to learn how to do it. Whether you think you need it or not, this is good practice to learn how to do. And then the meat and potatoes of what we do, guys. T3 Fibs ProTrader indicator tutorials. Guys, this is everything that I talk about. These are the rules that I discuss. This is what they look like. This is honest to goodness. Anything and everything that you need to be successful in the beginning, you're going to find in the software or in the tutorial section. You'll notice that the URL says building a foundation. Building a foundation, guys. You're going to learn to walk before you run. Isn't that funny, Ed? I've done that too. I've sent tech a message. Hey, my software broke. Back when I first started out, poor Jason had to put up with me. He's like, how is your brother so smart and you're not? And then he realized that I'm the pretty one and you can't have both. So what are you going to do? So guys, this is everything. This is everything that you need. And you know, I've been having amazing conversations with my wife. I've been having amazing conversations with my brother. And I've been having a lot of amazing conversations with you guys about simplicity in the beginning. When I talk about building a foundation, guys, you've got to walk before you run, right? You've got to put the work in to understand what it is you're looking at. In that first 30 days and beyond, and it says beyond because, guys, it works, whether you're on day 30 or day 3,000. Focusing on the 5-1 trend trades that happen after a termination condition on the 13-2 chart. Guys, this is your best chance for success. The high probability trend trade is your best chance of success. It's called high probability for a reason. It's high probability because every indicator on every chart says that it's time for you to take this trade. You have overwhelming advantages and you're trading a methodology that's been proven to win 70 to 80% of the time when you execute the rules properly. Guys, I can't stress this enough. If you're struggling, if you're coming back to trading and you're looking for consistency, if you are struggling getting that win percentage up, if you find yourself chasing trades, if you find yourself creating trades in your brain, focus on this first 30 days. Give me 30 days, reset, recalibrate, get your brain right. And what that 30 days is going to do for you guys is it's going to reinforce and it's going to teach you how to read your indicators. You're going to be a chart reader because 90% of what we do is just reading our indicators, reading our charts. 90%. In a 10-hour day, 9 of those hours are looking at your indicators and taking the information that they give you. 10% of it is going to be executing a trade. Good morning, Finch. And guys, for those of you that are newer in the room, I just want to let you know, keep posting those pictures, keep posting those charts, get your rules written on that chart. Let me know why you got in. Let me know why you got out. Let me know why your entry is where it's at. And we'll discuss each and every one of them. But I spend the first 30, 45 minutes really driving home these rules for the high probability trend trades. Really trying to sell you guys on keeping it simple. Sell you guys on letting yourself be brand new. So your chart reading, when you open up your workspaces, guys, you're going to be able to read your indicators and understand three very key concepts. The first one is where the market is likely to continue. And then you're going to use that area for an entry for a high probability trend trade. You're going to understand where the market is likely to go, and this is going to allow you to make intelligent decisions on profit targets as you develop a management plan. And you're going to understand where the market is likely to stop. And you'll once again be able to use that chart reading to know where the market is likely to stop. You can use it as a red flag, telling yourself this is not an area that I'm going to take a trade into because it may reverse the market. Or once again, knowing where it's likely to stop gives you an opportunity to recognize those profit targets ahead of time. So for 30 days, focus on the basics, guys. For 30 days, give yourself the advantage of a methodology that has been proven to win more than it loses, right? Because that's what we're doing here. We're trying to win more than we lose. We're trying to have an edge, an advantage every time we get into the market. So we're going to keep it simple. And in the spirit of that, 2 charts for this high probability trend trade. Only 2 charts. The first chart is a 13-2 chart. It's a broad stroke of a brush. Guys, you're going to use 1 bar, the most current bar on the 13-2. And you are going to determine whether or not your first 2 rules are met. You're going to be able to gauge the momentum of the market. That's rule number 1. You're going to be able to gauge whether or not you've reached an area likely to stop the market. Termination condition. That's rule number 2. You're going to be able to identify the trend of the market. If the background is red, you're in a downtrend. You should only be looking for rules to be met for high probability trend trades short. If it's green, you're in an uptrend. You should only be looking for rules to be met for high probability trend trades long. Trading with the trend, trading with the momentum, trading with a clear path. Guys, all of this comes from the 13-2. When these rules are met, 1 and 2 are met, you're going to go to the 5-1. You're going to go to a faster chart. And you're going to refine that broad stroke of the brush that the 13-2 provided you. And your 5-1 chart is just your entry chart. It's an entry chart allowing you to get the best of the best, that area where the market is likely to continue. That's your rule number 3. 3 of 3 for a high probability trend trade, taking place on only 2 charts. And when you follow this path, you follow this pattern, you let the 13-2 lead the way, give you what you need to take a trade. You let the 5-1 allow you to identify the best of the best spot. You're going to be able to reduce your risk, and you're going to be able to maximize your profit potential. So without further ado, let's talk about some rules. And I lost my rules picture. Let me find it real quick. I typed them out for you. Here they are. I'm going to put these in the room, guys, because simplicity, I'm going to embrace that start to finish. Hopefully you do too. Keeping it simple. 3 trend trade rules, guys. There's an awful lot of words here. Rule number 1 for a high probability trend trade says after a breakout of Fibonacci or after a new top or bottom causing a full reversal, the small triggers must be strong and located outside of the large trigger lines to look for the trend trade rules 2 and 3. Rule number 1 reminds you that if it's not met, stop looking. Don't look for that next level. The simple way to say it is rule number 1, we're looking for strong triggers. Rule number 2 says, do not trade into any Fibonacci areas that are expected to hold. Those are those termination conditions, those likely to stop. Good morning, Mike. Wait until a Fibonacci area breaks before continuing to take trades in the established direction with strong triggers. Rule number 2 simply says, no termination conditions. And then rule number 3, guys, this is going to be finding that best of the best entry, that area where the market is likely to continue. And we're going to use a limit order to buy or sell a pullback to an area. Those areas can be fibs, midbands, or 1-to-1s. And those areas are going to be inside of favorable large triggers. And I've got it written out right here for you. Use a limit order meaning that we're going to wait for the market to come to us. And we're going to buy or sell a pullback, meaning that if the market is trending up, it's going to come down so that we can enter a trade. If the market is trending down, it's going to come up so that we can enter a trade. We're going to enter at an area. It can be fibs, midbands, or one-to-ones. And the area is going to be inside of favorable large triggers. So guys, 3 rules providing 3 advantages. And I want you to think of your rules like that. What's the advantage that it's giving you? And if you break that rule, what's the advantage that you're giving away? Well, strong triggers give you the advantage of momentum. No termination conditions give you the advantage of a clear path. And by using a limit order to buy or sell a pullback at an area inside of favorable large triggers, you've given yourself the advantage of an entry where the market is likely to continue. So guys, 3 rules, 2 charts. We're going to take a few minutes. We're going to go through those rules. If you have a question about one of the rules, especially if you're on demo right now, I want you to raise your hand. I want you to make sure that you get clarity. Guys, I say this every morning. I'm going to say it again today. I have no time schedule. I have no agenda. I have 3 hours to make sure that you are comfortable with everything that you're looking at. And especially with today being Friday, I want to make sure that you're comfortable because, guys, you're going to do some market replay this weekend. You're going to practice the rules. You're going to examine the looks, and you want to make sure that you're doing it correct. So, rule number 1 says strong trigger lines. What are strong trigger lines? In an uptrend, small triggers are above the large triggers. The large triggers are wide. They're angled in the direction of the trend. Guys, it's the space created from the time they accelerate away from the large until they return. That space lets me know that the odds are favorable for the market to continue up. In a downtrend, small trigger lines below the large trigger lines. The large trigger lines are wide. They're angled in the direction of the trend. And again, it's that space between the two that lets me know that the odds are favorable for the market to continue down. So when we talk about your charts, when we talk about your trades, when you annotate your charts and write what you see, use that phrase, odds favorable momentum, guys. Odds favorable momentum builds confidence in what that trade has the potential to accomplish. And you're going to stick to this look. You're going to commit to this look for the first 30 days because when those small trigger lines break back inside of the large trigger lines, it's called a weakening of the large triggers. And when we weaken large triggers, anything can happen up or down. You take away the advantage of momentum and you turn it into the disadvantage of anything can happen. So rule number 1 is going to give us a very decided advantage, and you're going to look for it when the small trigger lines break away from the large trigger lines as they accelerate away until they return. Guys, this is the range where you're looking for opportunities. When you look at my charts, you'll see a lot of the example charts. When there is odds favorable momentum, you'll get these wicks, these tails below the midpoint of the bar. These are all potential entries for high probability trend trades. Hey, good morning, KR. So when we accelerate away until we accelerate back, as you begin to study, you're going to look for these wicks or these tails, knowing that this may be a rule number 3, best of the best, likely to continue entry. You'll see it go in the other direction as well. You'll begin looking for that high probability trend trade as the small accelerates away. You'll see some wicks, some tails, circle them. And then when those trigger lines return to the large triggers, you're going to stop looking for that high probability trend trade. So give me a Y in the room, please. Rule number 1. It's going to give you the advantage of momentum, right? Is it possible to have the trigger lines without the bars? I suppose so, yes. You kind of need the bars, but that's okay. Gratified? Can I ask why? They're trigger lines, they're moving averages. Jason and Tech may be able to help you pull that off. Maybe there's something in the software user guide. But that gets into technical questions. And as much as it hurts me to admit this sometimes, guys, I'm really good at reading indicators. I'm really good at chart reading, and I'm pretty good at teaching you guys to be able to do the same. I am not a tech guy. The technical side of things, it's just not my bag. That's John Novak's deal. That's Jason's deal. John makes pretty lines, and I teach you how to make money utilizing them. For a beginner, it would be easier to see, but gratified, you need those bars, don't you? Especially for rule number 2. Because rule number 2 says, don't trade into a termination condition. And the recipe for identifying a termination condition is that you have to witness price reach that area. And without those bars, you're not going to be able to do that. A termination condition may reverse the market. It may stop the market. It may create a bounce that takes you out of a trade. And guys, I'm going to scroll up and I'm going to open this picture one more time. I teach termination conditions every day. Guys, this was the news release this morning for entry as well. Yes, Ed. This is a termination condition, and look how it reverses the market. And it comes all the way down to a termination conditions. Guys, this was a 65-point drop in the S&P from fib to fib. Fibonacci is powerful. Termination conditions are powerful. I'm going to teach you how to identify them. Fibonacci-based indicator that may reverse the market based on a comparison of the trigger lines and the area. These areas can be blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots. These areas may be a cyan divergence low line or a magenta divergence high line. Any third divergence in the same area, or a large sharp midband if the large triggers are a full bar away. So those are the areas that may reverse the market. And gratified, this is where I talk about why you need those price bars, because the first thing that happens to identify a termination condition is price reaches an area. Those price bars come down and reach the area. Joel, you say you see the momentum when the price bars are above or below the triggers. Is that correct? Joel, no. Initially, when we're talking, sorry, because this is a good rule 1 question, so I'm going to backtrack just a second. It's not the price bars that I'm worried about, Joel. It's the trigger lines. It's the separation between the two. This is really what I'm looking for, because these price bars are going to work their way to both sides. Watch those trigger lines for momentum. And then when we get to rule number 2, that's when you're going to take a look at those price bars. When price reaches an area, whether it's support, resistance, 1-to-1s, divergence highs or lows, there's a 2-part process. And I'm going to write it on here. I'm just going to try and simplify. 2 things have to happen. Price reaches an area. Price bars come in contact or tick or 2 away from a fib-based indicator, just like it says in the instructions. So when price reaches an area, as you see these red down bars come in, get to support, your job is to ask yourself one question. Where are my triggers? Guys, this is the recipe. Price reaches an area of support. Where are my triggers? My trigger lines remain above. Absolutely, Paul. Got to be rules on there, though. Don't give me 100 pictures with no rules and say, hey, Mark, what do you think? Trust me on this one. It rarely works, because all I do is I just start to ramble if I don't know what you're looking at. Price reaches support. Trigger lines are above. If they don't have rules, Shane, give me 4 or 5 that you have questions on. This area of support is likely to stop the market. It's a termination condition. Rule number 2 isn't met. Up here, we see the same thing. Price reaches this area of support up top. The trigger lines haven't broken through. This area of support in the moment is a termination condition. It may reverse the market, but remember, guys, it's not guaranteed. What we're doing here is we're establishing whether or not we have the advantage of a clear path. This area of support, I love it, Shane. I'm looking forward to them. Guys, y'all don't realize this, but the more you post in class, the more questions that you ask, the better this class is. Yesterday was freaking phenomenal. Yesterday was such a great day in class. I had people coming out of the woodwork, people I hadn't seen posting in a while, posting charts, asking questions, and I think yesterday was pretty amazing. How do we know if an area is broke, guys? Rule number 2 says, no more trend trades until the area breaks. And then take trades in the established direction with strong triggers. So for an area to break, for this area of support to be broken, small triggers and large triggers must get to the other side. Support becomes resistance. Trigger lines are through. Odds favorable momentum. It's time to look for a high probability trend trade. So I'm going to ask again, guys, give me a why in the room. In order to identify a termination condition, price reaches an area. Where are my triggers? If they remain above areas of support, it's a termination condition. If they are below the areas of resistance, it's a termination conditions. And we're not going to resume looking for that best of the best trade until we consider that area broken. Guys, this was my Achilles heel when I started trading. I would trade short right here, hoping that that blue line wasn't going to hold. And I was separated from an awful lot of money. And it took me a while. It took a lot of posting in class. And I think it finally took a Skype message from my brother going, dude, seriously, you keep driving cars into walls expecting them to break. So respect that rule number 2. Respect that termination condition and get good at identifying it. And I want to use this one as an example, making sure, that you're comfortable identifying termination conditions. What's the first thing that has to happen? Price reaches an area, right? Guys, we've exceeded every area here. Do you see that? Price reached the area here. Your trigger line started breaking through. This is just a pivot. This is not a termination condition. This is a pivot with divergence. That cyan line prints. It lets me know that there was a little slowdown. And for you newer people, a pivot means that the market went down and then up, or it went up and then down. That's all it is. It's creating a V. Not a termination condition, but when price reaches that cyan line, when my trigger lines remain above, now I have a termination condition. Now I have rule number 2 not met. This is what we call a pivot stop out of a prior divergence, meaning that this line, price exceeds it for a few ticks and then trades back above. Guys, this is a no short scenario. This is a great termination condition. When this termination condition creates a full reversal, meaning that my large triggers go from red to green and gives me odds favorable momentum, this is what we call a strong bottom. Strong bottoms and strong tops are termination conditions that create a full reversal. So there's a great picture of a strong bottom. I'm going to give you this picture in the room. Guys, I'm going to give you a lot of pictures today. I want you to fill your spreadsheet. You'll see the same thing from a top, guys. When you get to resistance, let's walk through it. Price reaches resistance. Where are my triggers? They're all below. There is no more long trades. Termination condition. taking pictures of pictures all day long. Guys, I take more pictures than probably all of you combined. Try and catch up. The more you take, the smarter you get. Price reaches resistance. Absolutely no triggers break through. No more long trades. Price comes all the way back to support. All the way back to that mid band. All of my triggers remain above. No short trades. Guys, 90% of what you do is just reading your charts. And I'm going to share with you an amazing look. When price reaches this mid-band area, when price reaches this support, the large triggers don't follow along. You're going to see this off of mid-bands, and this is the condition that makes a mid-band a termination condition. When those large triggers don't follow along, it's like a vacuum sucking price right back up to those large triggers. Don't get caught trying to go short in that vacuum. It typically runs you over. Price pulls back up to resistance, to a cyan divergence high, and resistance again. Guys, I have 3 terminations here. Notice that these terminations create a full reversal, give me odds favorable momentum. Guys, this is your strong top. A termination condition that creates a full reversal, gives you odds favorable momentum, is a strong top or bottom. I'm going to give you this picture in the room. Put it in your spreadsheet under chart reading. If you're not using a spreadsheet, it's time to download a spreadsheet. So we have strong tops, we have strong bottoms. What if we have odds favorable momentum? Everything says down, the market's railing, it's got all of that rule number 1 advantage. But then it reaches these one-to-ones. And when it does, I'm forced to ask myself, where are my triggers? Well, all my triggers remain above these one-to-ones. Guys, rule number 2 is not met. Even with this odds favorable momentum, rule number 2 says, hey, you've given away the advantage of a clear path. Absolutely gratified. Or you can also look, Nexgen study picks folder, or you can search 90-day worksheet on your computer. It's there when you load it up, but I'm going to go and get the link, John Novak. Don't put it in there. I see you in the room. Hey, John and Mike, there's free candy in the trader's room. Price reaches support. Trigger lines remain above the area. Rule number 2 in effect. No more short trades. Guys, this termination condition creates a full reversal. Gives me odds favorable momentum. This is a strong bottom that gives me my best chance for success in that high probability trend trade. So why in the room? Help me out. I'm going to put one in there because I understand this and I feel good about it. Rule number 2 gives you the advantage of a clear path in order to recognize. Hey, Mac, nice to see you. Perfect test. Show me a picture too. Let's see what you got. That's my best of the best. See the circle on the tail. Guys, sometimes the market is going to take a 180 seemingly from nowhere. Everything's going down. You feel good about it. The area is broken. And then you get that pivot and it starts to shoot back up. Your next termination condition is going to help you identify that happening by using your smaller, faster chart. And using the termination condition, the only termination condition that I look for on a 5-1, 3 divergences in the same price range may terminate the trend. This is a very powerful condition when the 3rd divergence happens with the small triggers inside of the large triggers. Divergence is a loss of momentum. When you get a loss of momentum, a negative number will print. A cyan divergence line will print from a low, magenta from a high. 3 of these in the same location let you know that the trend may terminate. When the small triggers are inside, it becomes more powerful because look, you've gone from odds favorable to anything can happen, and you've lost momentum 3 times. Becomes even more powerful when that third divergence is higher than the previous from a low, lower than the previous from a high. That's that head and shoulders. Guys, when you see this on a 5-1 chart, you can anticipate this on your 13-2. When you see it on your 13-2 chart, you can anticipate larger moves in the other direction. So guys, rule number 1, odds favorable momentum. Rule number 2, no termination conditions. And now it's time to get off of the 13-2. Our rules are met. We're going to go to the 5-1, and we're going to identify that best of the best spot where the market is likely to continue. During the live market, this is going to be the look on your 5-1 chart when the 13-2 triggers are their strongest, when there's nothing in the way. In that uptrend, it's nothing but green bars, nothing but up bars. We're going to focus on the 5-1 large triggers. Are they up? Are they wide? Are they angled in the direction of the trend? And even more importantly, are they trending one on top of the other? Are my large triggers and my synthetic triggers working in this harmonious symphony, one on top of the other, aggressive in the direction of the trend? This is your best look. This is your favorable triggers. I'm going to give you this look. I want you to put it in your spreadsheet. What are favorable large triggers, Mark? Well, there they are. So when everything says up, we're going to focus our attention on the 5-1. We're going to look for those favorable large triggers, and we're going to look for the areas that are going to fall within. Remember, areas can be fibs, mid-bands, and 1-to-1s. But our rules say I'm going to buy a pullback at an area inside of favorable large triggers. A pullback is a small retracement in price. Guys, in this uptrend, with the advantage of momentum, with the advantage of a clear path, with everything up and strong, you're going to wait for it to come back to you. You're going to wait for a pullback, and a pullback begins with a reversal bar. In an uptrend, that reversal bar is going to be red. In a downtrend, that reversal bar is going to be green. But at the time of this reversal bar, you're going to create a window of opportunity, that area where the market is likely to continue. And that window of opportunity goes from your highest point of support inside of favorable large triggers to your lowest point of support inside of favorable large triggers. From this mid-band to these 1-to-1s, this is my window of opportunity. This is where the market is likely to continue. Right at the top of that window of opportunity, I'm going to right-click on my chart and I'm going to activate buy limit 2. And I'm going to wait for the market to come to me. I'm not going to chase price. I'm not going to watch ticks. I've identified with a proven methodology the best of the best spot to enter this market where it's likely to continue, and only one of two things are going to happen. Price is either going to come down, and I'm going to be in this trade at 79.21, or the market's just going to go without me, in which case it's not my trade. I'm in at 79.21, and my initial stop, 12 to 14 ticks, I'm going to make sure that it's below that window of opportunity, below the 1-to-1s, below the large triggers. When I put my stops in place, guys, I want them where the market shouldn't go. What does that mean? That means that if the market extends beyond this window of opportunity, it's not my trade anymore. I'm not hoping it goes up. I'm not wishing it would go up. It simply broke my rules. It's beyond that window of opportunity. It's no longer my trade. I'll take this trade 1,000 out of 1,000 times because 70 to 80% of the time when I take a high probability trend trade, this is my result. When the trade begins to move in the direction of the trend, I can reduce my risk from below the window of opportunity to a tick or two below that reversal bar. By waiting for the market to come back to the best of the best area, I've minimized my risk and maximized my profit potential. So guys, this is going to be the third why that I asked for today. Are you with me? The advantage of odds favorable momentum on the 13-2. Small's above the large are wide, they're angled in the direction of the trend. Guys, this is your best of the best look. No termination conditions, meaning that price has not reached resistance. If price hasn't reached resistance, there's room to the target. Rules 1 and 2 are met, and now I'm going to look for my entry. Remember when we said we were going to circle those tails on the 13-2? If that circle lines up with an area of support inside of favorable large triggers, guys, this is your high probability trend trade. This is what you need to study this weekend for the first 30 days. The only thing that we've talked about is finding your best of the best entry. When we talk about the perfect 5-1 entry, you'll notice that there's no divergence, no loss of momentum. My small trigger lines are well outside of the large trigger lines, meaning that I have odds favorable momentum. If both of my charts are in an uptrend, if both of my charts have an odds favorable momentum, if neither of my charts have any termination conditions, I have stacked the advantages in my favor. Couple things to note. People tell me, hey Mark, there's not room to that fib. Remember that we're not getting in from the top of the bar. The top of the bar is where the pullback starts. We're gauging our profit potential from the best of the best area up to resistance. I also get, but Mark, those small triggers on my 5-1 turned against me. Not the right trade. Remember, this is a smaller, faster chart. It's the momentum here that I'm worried about. 9 out of 10 times, those small triggers are going to turn against you. They have to in order for the market to get to the best of the best area. Now, guys, I have 2 lifetime owners that told me, yeah, they're good with this one. How about you demo people? How about you people in your first 30 days? How about you people looking for consistency? How do you feel about this one? I want you to use your voice if you need to use it. And guys, if you're terrified to post in the room, send me a private message. Tell me what to go over. But this is your best of the best. Now you just need to study it, right? You need to make it yours. This is how we're going to finish up the first hour, guys, because at 10 a.m. we've got some high impact news. I'm going to give you guys a high probability trend trade checklist, something that you can compare your trades to. I'm also going to give you a high probability trend trade checklist that has the pictures of what each rule means. And then finally, I'm going to give you, and this is the second half of your homework for this weekend, an example of how to write a trading plan, how to commit yourself to the best of the best look. So guys, the high probability trend trade checklist, it's just your rules. Yes or no, are they met? The second checklist, and guys, this is a good one for my new users. Here's the rules, and here's pictures of what those rules mean. Here are the exact looks from the manual, helping you identify what the rules mean. And then finally, guys, this is probably the most important thing that you can do for your trading success is write a plan. Put crayon to paper and write a plan. And this is an example of how to write your plan. And I want you to notice 2 important things. The first thing is that you're going to use the phrase my trade is. You're going to personalize it. You're going to own it. You're going to make it yours. Guys, this is your trade. You can't trade Mark Novak's plan. You can't trade John Novak's plan. You can't trade Finch's plan or Paul's plan or Gary's plan or Ed's plan or Ron's plan. Make it yours. It's got to be your plan. My trade is the high probability trend trade. All I'm doing is defining my entry point. In order to enter this trade, I must have the conditions of the checklist met. You know what? Must should be bold. It should be underlined. I'm going to commit 100% to the look that gives me the highest chance of success. Because guys, if I'm winning 70 to 80% in the beginning, that success breeds confidence. I'm reminding myself that this is a look that gives me 70 to 80% wins typically, right? Why am I taking these trades? Because these trades work. Is the market coming from a good top or bottom? It's not mandatory, but it's going to increase the likelihood of success. Do I have odds favorable momentum on the 13-2? No termination conditions. Is my entry the way it needs to be? Guys, if I can answer yes, I'm doing great. This is my entry. Even more importantly, I need to know what that entry looks like. So I'm going to put a couple pictures of my best of the best entries into my plan. Quick reference. Here they are. This is what they look like. This is what it needs to be. Guys, we are up to 68 pictures of high probability trend trades. I'm going to try and get John to upload this sheet onto the spreadsheet and kind of redo what's there now. So a couple in my plan, but you should have hundreds of these pictures over and over. And then as you move from high probability trend trades, guys, remember we said that's the first 30 days, right? Well, there's good news for you adrenaline junkies. All that chart reading that you've learned in that first 30 days is going to take you to a medium probability trade. Being able to recognize where the market is likely to continue, where it's likely to go, where it's likely to stop is going to set you up for success for a medium probability trade. And these are defined as when most indicators line up for a trade. However, a small issue exists. Your ability to read your charts based on the first 30 days is going to give you the ability to recognize these trouble issues, these small issues. This is going to be the vast majority of your trades when you get going. And when you're executing medium probability trades, you'll take the trades and manage them assertively. Your ability to read indicators is going to allow you to manage them assertively. You'll be able to use that 5-1 chart to recognize change happening. If there's any trouble in your way, you may take a portion of the position off at that trouble spot. Your chart reading is going to allow you to recognize that trouble spot. You can reduce risk to a zero loss level. Guys, taking medium probability trades doesn't reduce your chance for success. Taking medium probability trades increases your chance for profits. But you have to get through that foundation first. You have to get through that first 30 days, learn how to read your indicators, and post so many pictures in class to be sure that you're reading them properly so that you can manage these trades. Why did I break off and do that? Because 50-50 trades are going to be your first medium probability trade. And a 50-50 trade isn't your chance of success. A 50-50 trade means that your small triggers have broken through the area, that your large triggers have not. 50% are through, 50% are not. Guys, this means that the area is not broken, but it has the potential to break with odds favorable momentum. When I take, and I'm going to personalize it, you have to write your own plan. When I take 50-50 trades, my entry on the 5-1 must be perfect. And guys, it's easy to say that. My entry must be perfect. So now I have to define, what does perfect mean to me? It means no divergence, no loss of momentum on my smaller chart when the large chart's still trying to break an area. It means odds favorable momentum on the 5-1, which means that my small trigger lines are strong and outside of the large triggers. And finally, I want a small window of opportunity, and I just love to type woo, it makes me happy. I'll take 50-50 trades. I'll take an area with the potential to break if I have no divergence, if I have odds favorable momentum, and if I have a small window of opportunity. Guys, this is my best of the best look. If I have no divergence, if I have strong triggers, if I have a small window of opportunity. Guys, this is my 50-50. I took a picture this morning because I take a lot of pictures. Took too many pictures. There we go. 50-50 trades. Smalls have broken through the area with odds favorable momentum. The large triggers haven't made it. Divergence prints on a 5-1. Guys, this is not my trade. And look what it did. This is not my trade because more often than not, this is the result. As you grow with the software, as you add a market flow chart, you may look for signals. But in the beginning, I'm defining my first medium probability trade. Every time I add a trade or a condition, it has to go into my plan, and it has to be clearly defined. On 50-50 trades, no divergence will be present. Well, here's a picture of what that looks like. Once again, 50-50, no divergence, I'll take the trade. Same 50-50 scenario, divergence prints. Not my trade, and look what the market does. My rules give me an edge. They create an advantage. So guys, this is your entry. We've defined your entry. Everybody with me? High impact news in 5 minutes. You're going to spend 30 days working on your entries, guys. 30 days getting the absolute best of the best. And for those of you that don't know, my wife is learning the software right now. So I'm recognizing a lot of things that brilliant people do as they learn the software. And the first thing you guys do, because you're all brilliant, is you try to circumvent really understanding the rules to get to the next step. I think we all do it. I want to get to the finish line, Mark. I don't want to do all that running in between the start and the finish. I just want to get to the finish line. Define your entries. This is your first bite of that big elephant that is day trading. Now you're going to clearly define your management plan. Remember, management takes an ability to read your indicators. So let's keep it mechanical. Let's keep it very methodical. Let's take the emotion, the fear, the anxiety, the stress. Let's take everything about it and make it so black and white that it's hard to screw up. I will trade 2 contracts. My initial stop will be 12 ticks. It'll be adjusted below or above the window of opportunity initially. What has to happen here, guys? You have to understand how to move your stop. You have to understand the window of opportunity. There's no room for opinion here. Make it happen. Move 2 ticks above or below the reversal bar in the direction of my trade. You need to be able to identify and understand when the trade has gone in the direction so that you can move your stop below the reversal bar. I'll take profits on my first contract at 100 and move my stop break even manually. It's mechanical. It's 100% methodical. There's no opinion, no fear, nothing. Just do it. Take profits at 100, go to break even. My second target will be 200. Guys, you're looking for $300 of profit in a $200 move. And after that $100, you're break even, which means that you're probably going to have a bunch of $100 break even trades in the beginning. But that's okay because you're working on your entries. And that $100 gives you the feeling, that dopamine kick, that everything's gone right. You want to trade, break even, you didn't lose, you feel good about it, you're ready to move forward. This is your mechanical, this is your methodical approach. This is going to grow. But if for every trade that you take where your entry is perfect, you go through and manage, re-annotate the chart, how could I have held for more? How could have I gotten out sooner? What was there? You're going to build a management plan that becomes very easy. If you're coming back and consistency is your goal, keep it mechanical. If you have fear-based entries, Paul, take care, man. If you have fear-based entries, if you have fear-based exits, if you have fear-based stop movements, keep it mechanical, guys. Simulator. Simulator. If you're afraid to lose, pretend money. You're going to pucker something fierce when it's live. Guys, high impact news in 1 minute. Finch, have a good one. Enjoy the beach. Have fun. Guys, let's look at the S&P. Man, I've got a lot of stuff up. High impact news coming up in about a minute here. Not for long, Mike. So guys, while the S&P reacts to news, I'm going to take a few minutes. When I come back, we're going to start looking at your charts. We're going to talk. If you're brand new in this room and you've never posted a picture, I want to see a picture from you. I don't care what it's a picture of. It needs to be from your monitor, taken with capture software. Let me know that you can do it. We're going to look at charts, read indicators, and get into that second hour in just a few, guys. I'll be back. Here goes news. All right, guys, back at it for the second hour. Here we go. A little bit of news there, right off a termination condition, right? Pretty good stuff. Ed, you said you'll be home in 20 minutes if you're staying on. 63% win-loss yesterday. 2 contract trades, $22.90. $510 in commission fees. Broke your rule 6 times, cost you $11.25. The comments, I don't know. One thing that I don't worry about is what the news is. The only thing I worried about is the impact that it may have on the market. But it looks like it was the preliminary consumer sentiment. So I can find it. It's a level of composite index based on surveyed consumers. I don't know what that means. Why traders care? Financial confidence is a leading indicator of consumer spending. McComas, it's all Greek to me. It might as well be a different language. But what I do know is that when that little red box, high impact expected, it can make the market move erratically, and I don't want to be in front of it. That's all I need to know. It's not like trading places where we're waiting for the OJ report. Guys, we're going to let the news do what they do, right? We're going to let the news have the effect on the market that it's going to have. There's 2 types of traders, guys. Here's my picture again. There's sharks and remores, okay? Know your place. The sharks trade thousands of contracts. The sharks have millions of dollars. The sharks create tops, they create bottoms, they create momentum. The sharks fight it out at Fibonacci support and resistance. We take advantage of everything that they do. When a shark creates a top, when a shark gives me odds favorable momentum, when there's not a Fibonacci area that those sharks are likely to fight at again in the way, that's when I take my trade. This guy tried to be a shark. He had 2 contracts. He wanted to be the first one in. He became shark food. So I've been posting this picture for a long time, guys, but it kind of reminds us that we're not in control of the market. What we're doing is we're letting those deep pockets move it, establish tops and bottoms, and then we're going to take advantage of what they do. Pretty cool. Gratified, was it you that asked about defining the small window versus other window of opportunity? Let's do that real quick, and I took a picture. Are you with me? No. Well, guys, then this lesson's for everybody. A small window of opportunity. It means that my areas of support or resistance inside of favorable large triggers is maybe a couple ticks wide, couple points. The areas are close to one another. My trigger lines are tight, one on top of the other. Guys, this is a small window of opportunity. This is your best of the best. It reduces risk, makes it easier to find where the market's likely to continue. This is a wide window of opportunity from your highest point of resistance to your lowest. Is the market going to stop there? Is it going to stop here? Is it going to stop here? I don't know. It's likely to continue from any of those places. But what I do know is that my stop has to go beyond that window of opportunity. So if I get at the lowest point on this giant window of opportunity, my 12 ticks might be right here, right at an area of resistance inside of favorable large triggers. And I'm going to have to increase my risk if I take that trade. Does that make sense? Gratified? I hope you're there. The tighter those triggers are, one on top of the other, the easier it becomes. All right, guys, I'm going to scroll up and I'm going to start looking at your charts. I'm going to start answering questions. Just a reminder, when I do that, I'm going to show you what I'm working with here. Just so nobody feels like I'm ignoring them. So here is my screen. Sorry. I have to scroll up to get to your pictures, which means that I've got to go back and forth. So if you ask a question while I'm looking at charts, there's a chance that I'm going to miss it in the moment, and I may answer it just a little bit later. Don't let me miss a chart. Don't let me miss a question. I know, that was pretty cool, right? All right, so I'm going to scroll up the top. We're going to take a look. Let's see what's going on. Bum, bum, bum. Man, there's a lot of stuff. Looking for that first trade of the day, guys. Almost there. I accidentally scrolled to yesterday. All right, here we go. First one of the day, Finch. I think you're already at the beach. Whoops. There we go. Guys, I actually took a picture of this trade too, and I want to talk about it. And I love this trade. Odds favorable momentum. It's kind of a 50-50 coming into that pivot stop out. He has strong triggers, window of opportunity. And I want you to see something about trusting rule number 3, and I want you to see just a little something about why we trade from the best of the best areas, guys. The best of the best area was 39.78. Remember I said trust the area, don't watch the ticks. This bar right here started to trend up. And Finch, I don't know if you're still with me or not. Guys, I can tell you from experience, this is the, oh my gosh, it's going without me. I better jump into that trade entry. Anyone ever done that? Everybody done that? I've done it lots. Still a great trade. He made 4.25 ticks, or 4.25 points, guys. That's a nice trade, right? That's a 4-point trade. By simply waiting for the pullback to the best of the best area. He had 2 points less risk per contract and 2 points more profit. That 4.25 turns into 8.25. Guys, if this happens once a day, that's 20 points a week. That's 80 points a month that you're cheating yourself out of by watching ticks and not trusting areas. Part of the plan is developing trust. Seeing the same thing over and over so many times that you feel compelled to follow your rules, that you always follow the rules because you believe in the advantages provided. And that's exactly what this is. You see this entry a lot. It's a fear-based entry. It's an, oh my gosh, the fear of missing out entry. And that's okay. Still a good trade. All right, let's see where we're at. Guys, the next ones are me. Checklists for the win. Odds favorable momentum. No termination conditions. The market pulls back to an area of support inside of favorable large triggers. My first 2 targets were reached pretty easily. And I said to myself, coming from this great bottom, I'm going to give it a chance to go to the next one. And guys, I gave back 6 points worth of profit by not trusting an area likely to stop the market. Not proud of that, but I had to take a picture and I had to give myself a note. Soon after, strong triggers, 50-50 trade. The smalls are through, the large are not. I'm coming from a good bottom. No divergence, strong triggers. I take my entry. Profits reached, profits reached. Guys, it was a good morning this morning. Checklist trades for the win. Gary, let's see what you have. Small's above the large are wide, they're angled in the direction of the trend. Pull back to the area of support inside of favorable large triggers. Everything says go up, you're going up. Nice trade. Gary, are you in here? I'll teach you how to change that back. It's just right-clicking below over here, but you have to do it on this chart, and you're going to manage chart trader properties and just make sure that it's going in monetary, not percentage. Joel, let's see what you did. Here's your 13.2. At the time, it looked like a 50-50 trade. It is, very much. Small's above, large below. The area hasn't broken yet. You don't always have your brain turned on. That's okay. So, Joel, when I have a 50-50 trade, I prefer to not take it with divergence. This one worked out great for you all the way. Tons of momentum. You wait for the pullback. I like it. There's another entry if you're taking those 50-50 trades. Nice exit up there. You'll work on your plan here. 50-50 trades. Not everybody likes them. But your entry's on a reversal bar. There's a market flow signal if you were looking for the second entry. So Joel, it's a nice trade. It is a 50-50 trade. The execution is great. You got in on the pullback, so risk is minimal as you determined. But look at that momentum on the 13.2. Man, that leads the way for me. That's what makes me feel great about my odds of success. Nice trade, Joel. Not high probability. Medium probability. But good one. Guys, small below the larger wide, angled in the direction of the trend. Finch, making it look easy. You got in very, 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 very late, which minimized your profit potential quite a bit. Same one. Not a rules-based trade here. None of your trigger lines have made it through support. Your large triggers are still down, giving away a lot of advantages there. You don't have to be first. Let the sharks be first. All right, Sour Candy Apple, are you in here? Let me get down to the bottom here. All right, Gary, real quick for you because you had the question. Open up your trader, right click, go to Chart Trader Properties, P&L Display Unit, Currency. That should get you squared away there. Oh man, Joel, I'm sorry about that. I definitely know something about back pain. It's hard to make good decisions when you hurt too. Go rest up, eat a couple Advil, get a heating pad, stretch your glutes, and I'll see you next week. I hope you feel better, man. So Sour Candy Apple. You said you made a trade to recover from it. What if you just skipped the ones that needed recovery? Let me find it real quick. Where are you at here? Man, you guys are posting a lot. I like it. So you say you got a short trade, but you went long. And I think that's the first challenge, is you said that you got a short, but you bought the market, meaning that you were hoping the market would go up. And then your exit, it did go up. It pulled right back to an area of resistance inside of favorable large triggers with everything saying down. Hopefully that was just a mistake. And Sour Candy Apple, just a friendly reminder. Buy means that you want the market to go up. Sell means you want the market to go down. So if you buy and everything's red, you're fighting. And if you sell and everything's green, you're fighting. So this one kind of went the wrong direction. You fought everything. And remember, I need to see a 13.2 and your 5.1 so I can give you the best feedback. The only thing I'm sure of on this one is that everything was screaming down and you went long. Finch says, messy trade. Smalls above, large below, larger down, just jumped in. Man. Absolutely no rules met, fighting everything. Guys, sometimes you get lucky on simulator and you start to believe that that luck is a reflection of your skill. That's a trade that will eat your lunch over and over. John Novak, trend trade long. Smalls above the large are wide, they're angled in the direction of the trend. Picture perfect entry. You add on. Take an exit at the first potential trouble spot. Take an exit just to get some money in you, and yeah, definitely got out a little early on that one. Using the 1-to-1s, but with that odds favorable momentum into it, you had a good shot of hitting that fib. You know that, but I like to talk it through for the kids. Paul, let's see what you did. That looks like the same one, doesn't it? Smalls above the large are wide, they're angled. It's a 50-50 trade, so he let it push just a little bit lower. Money, money. Nice job, Paul. Everything that we teach. Finch catching the exact same trade. It's nice when everybody's seeing the same thing. Taking the same trade. Beautiful. And then there's jumping in again. Hoping things work out. Consistency, guys. Could you take the same trade every time? Gary sharing his checklist for you guys. Steal that one. That's a good one. Paul on a 50-50 trade, right? Smalls below, large above. No divergence. Perfect entry. And they just rocketed a little bit up. Rules were met 100%. It just came up a little higher. Gotcha. That's a bummer. That happens sometimes, guys. Sometimes you take the perfect trade and it just doesn't work. Michael Bogatin, nice to see you this morning. Tons of momentum on a 13.2. No divergence on the pullback to the best of the best area. Take some quick profits because it is into a potential termination condition. And then you don't hope, you have Fibonacci. You know exactly where that trouble spot is. Beautiful trade, great profits, tons of advantages. Very well done, Michael. Not high probability, it's medium probability. Maybe even a little lower because of those termination conditions. But still, not a bad looking trade. NG time. Is the market coming from a good top? It is. Do you have odds favorable? You do. This one's a 50-50, it looks like. No divergence. Way late on your entry, right? Super late on your entry. 2 whole points late. Still nice. You said you trailed stop and you were stopped out at 39.57. Got to give it room. Got to give it room to work. Ed S. You did, Gary, and I appreciate that. And you know what? I'm going to share it right now because you know I saved it. Guys, there's Gary's checklist. If you want to take it, maybe adapt your own based on what you see from him. All right, Ed. Anything can happen triggers, 50-50. You jump in and you're rewarded. Anything can happen triggers, but you clear the area, you jump in. Doesn't work out. It starts to turn, odds favorable. You don't take the best, you jump in, you make money. Ed, I haven't figured out your plan yet. I'm not going to lie. It doesn't make a lot of sense to me. Odds favorable. Jump in. That's probably from the bottom. Skip the pullback. Get in at the very top. Make less money. Risk more. Jump in. Make money. Ed, I'm glad this is working for you. I really am. I hope that when you transition, it continues to. It's difficult when it's not repeatable. All right, NG time. Same thing, jumping in. Things start to clear, divergence, you take it down to the next area. You're looking at divergence. These triggers are strong up. These triggers are all up. These triggers are up and you're smaller above the large and you go short. Not a high probability trend trade, my friend. Once again, I'm glad you won. I'm glad you made it. All right, guys. I always feel like a butthead when I'm doing this. At the time of your entry, the large triggers are up. At the time of the entry, your trend is up. Your smalls are above the large. You're not coming from an area, and you have no idea that this divergence is going to happen. There's the potential. You're miles above support on your 5-1. Large, synthetic, everything's up. Your small triggers haven't even broken below the synthetics yet. And you're going short. On your 8 range, smalls are above the large are wide, they're angled, you're in an uptrend. Everything. NG, is the market coming from a good top or bottom? No. Do you have odds favorable momentum? No. No termination conditions? I'll give you that one. Area inside of favorable large triggers? No. Guys, you have to be honest with yourself. Just because you check yes doesn't make it true. In NG time, I'm not trying to beat you up here. Even here, you put flat triggers on the 5-1, but strong triggers on the 13-2. Strong triggers up. Triggers up. Do you see it? This is the difference between trading rules and trading opinion. You had the opinion that this was going to go down to support into that midband. Your indicators hadn't told you that it was yet. You got lucky. And I'm glad that you did. It feels good, right? Feels good to make profits. But NG time, you have to ask yourself, if each of these arrows up represents something against you, how repeatable is this trade? Is this a trade that's going to win more than it loses? Is this a trade that if you went and stood in front of the jury of super duper traders that you could defend and why you went short? If you had a red Fibonacci resistance right here that got met to the tick and things started to roll, I might be able to get on board. But you're not even coming from an area. Yeah, so nothing says. And guys, this is one of the things that I think is great about this class. I appreciate each and every one of you, but if you show me a winner and your P&L is negative, I'm going to ask you where your loser is. If you fight the trend, I'm going to ask you why. We're always going to strive towards getting to a point where everything that you do is repeatable. Everything that you do has a reason, can be tested, can be back tested, provides an advantage. Shane, you said the market will correct our cocky attitudes quickly. It typically does. AK Sid, let's see what you did. You have one trade from yesterday which went in profit for a bit but dropped fast, ended up break even. I can't tell you where you should take an exit, but I can tell you what went wrong. AS Kid, are you with me? Cool. So let's take a look at it. This pivot is not coming from an area. Not at all. At the time of your entry, you're trading directly into resistance that held to the tick with absolutely no trigger lines through it. So you're trading directly into a termination condition. That little bit of momentum made you feel like you had done something very right. And then divergence prints on a 50-50 and you get stopped out. There's no reason to jump into a trade here. It's not a rules-based entry, AK. Remember, when we have odds favorable momentum, when there's no termination conditions and the rules aren't met here, our entries come from an area inside of favorable large triggers. So it's not just a pullback. It's a pullback to an area inside of favorable large triggers. Your favorable large triggers are all the way down here. Does that make sense? So I'm not going to tell you where you should exit the trade. What I am going to tell you is you gave away a tremendous amount of advantages when you entered. And then when this divergence printed on a 50-50, even with the lucky entry, and that's cool, that was your signal that things are probably not going to work out so well. Divergence prints on the third bar, which means that if you were respecting the divergence on a 50-50, that's your exit right there. Does that make sense? A lot of advantages gone on this one, and it's okay. Get excited sometimes. We're like, man, it's going up. I see that momentum. I see the trend. Yes, I love this. Here I go. I'm going to trade with it. And then you just want to be in that trade. And that little bit of patience, waiting for the best of the best, creates a little more opportunity for you. Great picture, though. Thank you for that. Oh, and then John, lie to us, lie to yourself. You don't get what you really want, which is to be better at trading. Humility is the key component of trading. Amen. Guys, it's like resetting your simulator after 10 mistakes, then making $500 and saying that you made $500 on the day. So right now the S&P, termination, and they try to push up. Termination, they try to push up. Termination gives us a full reversal, gives us odds favorable momentum. 50-50 trades. Smalls are through the area, the large are not. This has the potential to break, but it is not a broken area. No divergence and strong triggers. If you entered this trade at the mid-band, your stop is 2 ticks below that reversal bar, and you probably just got stopped out. Look at your window of opportunity from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. $50-50 trades, no divergence, windows of opportunity, lower probability. Crude oil came from resistance, almost to support, pushed up. Was that a 50-50? Let's look. It sure was. 50-50 with divergence. Things didn't work out. Going to the downside, 50-50 with divergence. Things didn't work out. Now 3 divergences, 50-50, divergence, Small's above the large are wide, they're angled in the direction of the trend, and then you work into that no divergence on the pullback. If this is your trade, the area is not broken yet, no divergence, pullback, stacked area. Just see what happens. It's all chart reading. That's all we can do, is read our indicators, wait for an advantage, and when the advantages are there, take the trade. Has everybody written a plan? Has everybody just written down, whether it's simple, whether it's advanced, remedial? Has everyone taken a second to written down what it's going to take to get them into a trade? Have you written down what it's going to take to get you out of a trade? Have you guys done this yet? Let's go back. Let's open up a 13.2. There's nothing happening right now. Let's look for odds favorable momentum, no termination conditions, and let's look for those tails. Here's one at 909. Best of the best, guys. Odds favorable, no termination conditions. Here's our tail, our potential entry. Scrolling back, let's see what we have. Things go a little sideways at news, right? There was one. I know it's one because I took the trade. We're going to see what it looks like. Here's one of those 50-50s. We'll see if there was divergence on a pullback. Scrolling through. Here's odds favorable. No termination conditions. Guys, are you with me on this? This is a great study tool for the weekend. Coming through, look at that. Directly into support. Trigger lines haven't broken. That's not my trade. Then we come back. So let's see where those circles are on the 5-1, guys. Let's see how that divergence went. No divergence on a 50-50. We'll circle that one as well. Directly back to an area of support inside of favorable large triggers. If you were taking the mechanical approach, 300-200 or 100-200, a lot of you probably made $300 on that trade. If I scroll back to my next circle, guys, took some patience today, didn't it? Oh my gosh, an hour and a half to get to my next circle. 90% of what I do is reading my indicators. 90% of what I do is waiting for an advantage. Look at how the market looks there. Notice how there's no circles? Isn't that ugly? But there's one. Just below the mid-band. Maybe you didn't catch that one. That's okay. Let's look for the next one. A lot of patience today, right? There we go. 8:32, guys. 2 minutes after news. How did this one work out? That's a pullback directly to an area of support inside of favorable large triggers. And guys, that's about the earliest exit I could have possibly taken, right? I got out at resistance. Here's a management opportunity. Look at the trigger lines. The trigger lines say, hey, Mark, hold that contract for more. To be honest with you, I was out of this trade so fast. This was a 50-second trade. It was 3 seconds from the time my first target was hit until my second target was hit. It was out before I could react. Guys, this is your high probability trend trade. It's the best of the best, guys. Focus on it, learn it, embrace it. Make it yours. I think we already saw that one on the S&P, didn't we? Whoops. If you go back and you circle these trades, look at those split triggers. It's not the best of the best. Still a good trade. Guys, if you scroll back, if you study these, if you market replay, if you take these trades over and over, create the awareness, create the confidence, support, all of my trigger lines remain above. Rewatching the fig, and isn't it amazing what you learn when you watch a video over? Odds favorable momentum, absolutely. No termination conditions, absolutely. Odds favorable on the 8 range, I like this. You created your own, absolutely. Area for entry, absolutely. George T, that's a nice trade. That is every rule met for a high probability trend trade. 13.2 coming from a strong bottom, full reversal. Odds favorable momentum. No divergence on a pullback. Guys, look at them trending one on top of the other. That window of opportunity is virtually a line. George T, I'm going to consolidate your picture down to 2 charts. But this one goes into my spreadsheet because this is, and look at that, NG. What's an NG? That's not crude. That's not the S&P. Guys, this methodology, these pictures, these advantages, natural gas, they work on every market. They work on every time frame. If you want to hold for bigger moves, use bigger charts. If you want to trade your stocks, it can be done. There you go. Guys, I'm up to almost 70 high probability trend trade pictures right now. All of them belong to you guys. All of them belong to traders that started from ground zero, from traders that began with the foundational approach, that developed a plan for themselves, and learned to execute with consistency. Elvis, you build a chart, you recognize areas of support and resistance, you wait for momentum and nothing in the way, and then you take an entry with a pullback at an area inside of favorable large triggers. That's it. It's the same methodology. You have to have, I want to say, kinetic. It's a different set of data. So you have to have stock data. Nexgen, Ben, I'm on the 323. I moved over to the March. Where's my market analyzer? It's pretty much the same. It's split right now. It's about 100,000 shares difference, but I'm on the March 23rd. First Thursday of every month it begins to roll, so it divides. Today could be either. They're both moving pretty smooth. Next week it'll probably be all 323. Does it? Kinetic, that's it, Elvis. And then if you need help, Elvis, if you're trading stocks, you need help building a chart. John has built stock charts for a lot. Reach out to him. Every now and then he'll post his Tesla chart. I've seen him post Apple. When our father was retiring from Hewlett Packard, Had a lot of stocks he was thinking about getting rid of. John helped him identify a good point to sell those off. Termination condition. Couple opportunities on the way up to it if it fits your plan. Then we reach resistance. Absolutely no trigger lines have broken through. Guys, when price reaches a key area like this, large triggers remain up all the way up here at this reversal bar marker. That mid band gets hit. Guys, that's your first target. Expect a retest. You don't have odds favorable momentum for shorts, do you? But you're into a termination condition for longs. Nothing more frustrating than having to sit around and do nothing because you don't have advantages. Some of you would rather just give your money to the market for the sake of being busy. I've seen it. I've done it. Sour candy apple, sorry. That's not funny, but it is kind of funny. I've done that. That's why we use limit orders. That's why we have a methodology that says use a limit order to buy or sell. I'm not saying that this is a short, but look, if I put a sell order there, I can't hit a button twice. All I know is that my rules are met 100% to take a trade at this price range. So I'll let the market come back to me. Guys, if you're not using limit orders, if you're just jumping in, hitting buy now, it's because you don't trust the rules yet, and that's okay. You don't have to trust them day one, day two, week one, week two. But what you're going to find is that there's a very distinct advantage to understanding them so well. I've done that one too, Gary. Or wait until you put in manual stops and then you forget to cancel one out, and 3 hours later you accidentally go long because you forgot to cancel it out. So guys, if you ever put in, let's say you have no ATM strategy, no stops, you got to be able to do it. Yeah, market orders will suffer slippage. Sometimes that's good, sometimes that's bad, right? It depends. It's Friday, guys. How's your week been? What do you guys want to talk about? I'm going to put it on you for the last hour. I've been flapping my gums for 13 hours this week. What do you guys want to talk about? What are you struggling with? This is a great opportunity for you to go, hey, Mark, I need help with entries. Hey, Mark, is this odds favorable momentum? Show me a picture. Let me know what you're doing, guys. Price reaches resistance. Absolutely no trigger lines break through. Price reaches support. Mid-band. Absolutely no trigger lines break through. This is called a reversal bar marker. This is the point at which this bar will become a reversal bar. If my large triggers are above that reversal bar marker, guys, here's a pattern that you can recognize and identify. Everything inside this white box is like a vacuum. And it's a vacuum sucking price right back up to those large triggers. Doesn't happen all the time, but this is the same thing. This is how we establish that a mid-band is a termination condition. Price pulls back to the large triggers. Guys, if it didn't, we wouldn't get these great entries. So take this picture. I'm going to give it to you in the room. Guys, you want to have the biggest advantage ever? You want to stop taking those losers that you wonder why they lose? Take that picture. Put it into your spreadsheet under termination conditions. Call it large trigger, full bar away. Ed, show me a chart, show me your pre-trade. Do me a favor, don't call out what's going on. Because what if you're wrong? What if you're making a mistake? And a new trader that doesn't know he should be on simulator, just like's happening right now. Ed, which way is your odds favorable momentum? And guys, this is why in this educational room it's so important that you have a conversation with pictures. Ed, it's got so much work to do to turn, doesn't it? Smalls are above the large. I don't have odds favorable momentum. It's not a high probability trend trade yet. The flip side, Ed, because I want to give you points. Termination condition, everything's going down, small triggers are strong, everything says down. There are some people that will take this trade to the next Fibonacci area, but it's not a high probability trend trade because you don't have the advantage of odds favorable momentum, which makes it a what? A medium probability trend trade, a lower probability trend trade? It doesn't mean that the advantages aren't there. Divergence from resistance, full turn, small triggers down, trend down, divergence, lower divergence, strong triggers, small window of opportunity, clearly defined support. Right? Pretty cool, right? Ed, you're at that amazing point where you're starting to read indicators. You're starting to get good at your chart reading. You're starting to recognize advantages, even if they're not high probability trend trade advantages. Don't be sorry. That's a good read, Ed. Price reaches support. Large triggers are a full bar away. Ed, your jump in. Didn't believe in support with no triggers through it. Gave it all back. And then you went short with the small triggers coming up strong after a termination condition. It took your money. Then you had a termination condition and you went long a couple times and it took your money. And then you waited for everything to agree and you got paid. Ed, you're working hard, friend. You are working hard. You're trying to catch every move in the market. Do your thing. But man, what if all you did was wait for the best? Maybe drink a little decaf, sit on your hands, make a sandwich. Guys, it never pulled back, did it? Gives us a 50-50 with divergence. Sometimes it pulls back, sometimes it doesn't. Let's see how many times it did though. Price pulls away, closes the gap to the large triggers. Price pulls away, closes the gap to the large triggers. Pulls away, closes the gap to the large triggers. So guys, you can recognize those patterns. They're not always going to happen. But you can create expectations based on patterns. Ed, 50-50 jump in, made money, it pulled back like it does, gave a lot of it back on the second contract. Stick to your plan. Got to stick to your plan. And the cool thing is, guys, is your plan's going to change. It's going to change so much over time. You're going to get smarter. Your ability to read indicators is going to get better. Everything that you do is going to become easier. You're going to be able to look at the market, and in a fraction of a second, you're going to say, I've got odds favorable 50-50, two divergences, not my trade. Or you're going to say, I've got odds favorable 50-50, two divergences. I need to wait for a pivot stop out and a market flow signal. Or you're going to say that the market's just going nuts right now, and I'm probably not going to risk a 50-50 trade. I don't know what your plan is unless you send it to me, unless you put your rules on the chart. Didn't take this because you see termination conditions everywhere, John. Ed, take a picture of it. Write the rules on it. You tell me. You've been here long enough to tell me. John? This is a great reminder, guys, especially if you see termination conditions everywhere. I did too. Well, at first I saw them everywhere and I ignored them, and then I started seeing them everywhere, and I was afraid of my own shadow, and then John, it all evens out. Remember that the 13-2 leads the way. On the 13-2, you're going to gauge the momentum, make sure that it's odds favorable. On the 13-2, you're going to look for those termination conditions. And it's important to remember that 13-2 is where you're going to identify those areas that are potential termination conditions. The only one that I look for in a 5-1 is the three divergences in the same price range. So John, maybe this will help you. Maybe this will take a lot of the fear out of those termination conditions. Make them be on the 13-2. Was this was crude oil? What price was that at? Let's see if we can see it. Does that make sense? So it's there too? Then that's perfect, John. Then it's a termination condition. But what's awesome is that sometimes on your 5-1, when there's no termination condition on the 13-2, the market may bump its head on a 1-to-1. It may bump its head on a fib and give you that great pushback to get you to the best of the best entry. So remember, if the 13-2 says guns ablazing to the upside, if the 13-2 says there's nothing in the way, that's that bigger broad stroke. That 5-1, if there was something here, that may have been just the push you need to get back to your entry. Does that make sense? Awesome. Ed, let's see what you got, brother. All right. All right, so Ed, let's just do it. 1045, 1045. So here's your circle. And once again, Ed, I'm not saying that it's not a trade, but what I am saying is it's not a high probability trend trade. At the time of your circle, your large triggers are up, right? What does that mean? That means that there's no odds favorable momentum. Rule 1 not met. At the time of your circle, price had reached a mid-band. The large triggers are a full bar away. That also means that that's a potential termination condition. Rule number 2 not met. And we don't have an area inside of favorable large triggers. Rule number 3 not met. So Ed, not a high probability trend trade, but again, I'm going to give you props where props are due. You have an amazing termination condition. You have the strongest small triggers ever. You have no divergence on a pullback to those 1-to-1s with the large triggers already rolled. Ed, this is a rock star trade to get you down to that area, but it's not a high probability trend trade. Does that make sense? You know how I go through, and this is one of the things that I do, guys, and I do this a lot. No worries. let me see if I can find a couple. I take pre-trade pictures, guys. I take them a lot. I take pictures of my orders in place, just like this. Before I ever take the trade, before I ever get in, I take pre-trade pictures just like this. And what this does is this reinforces the rules. I can walk myself through it. So I get in this habit of taking a picture, and I have to look at the picture for a second. Do I have odds favorable momentum? Yes. Termination conditions? No. Area for entry? Absolutely. Guys, this is a rock solid, high probability trend trade, and it's coming from a great top that created a full reversal. Before I ever get in the market, I'm analyzing, are my rules met? And I'm saying it all the time. Did it meet the rules? Did it meet the rules? Did this trade meet my rules? And then I take a picture after. Did this meet my rules? Yeah, it did. Fibs hold with the pre-trade and then the trend trade. It is exactly, George. Ed, the picture that you showed, John loves this trade. Great termination conditions, full bar on the 13.2, triggers roll with a stab back to a mid-band, 1-to-1s with everything saying down. That's very much a John Novak trade. It's great chart reading. And there's a lot of advantages there. So, good stuff. Guys, just because I tell you that it's not a high probability trend trade doesn't mean that it's not a trade. It just means that it's not a high probability trend trade. Momentum on 3 charts, breaks, goes. That's you, Ed. That's the one, right? Let it clear. Here your jump in makes sense with room to it. Great profit targets. Everything go in the same direction. Even this one right here, everything's going the same direction. And I think, Ed, that's a big key to when you find success, is when all your charts agree. All right, so McCommons. What kind of trade is this? So McCommons, I'm going to put this on you. And guys, I ask this of people that are fighting. At the time of your entry, large triggers are down. Small triggers are still below. Large triggers are down. Everything says down. I'm below areas of support. Everything says down. Everything says down. And you went long. And you were separated from your money. And you know that you got in early. Guys, if a top is going to be a top, if a bottom is going to be a bottom, look at this. Let me get us over to it. If this is going to hold, these are going to roll. If this currently is going to hold, these are going to roll. You don't have to be first, guys. Let the sharks be first. Let the sharks fight it out. When every chart says down, going up should be the last thing on your mind. When every chart says up, going down should be the last thing on your mind. Guys, this is a book that John wrote. You didn't know he was a published author, did you? How to Commit Financial Suicide in 1 Easy Step by John Novak. Note, only one page has any information. All the other pages are blank. Chapter 1, warning signs your friends are in trouble. They're trading against strong triggers. Chapter 2, warning signs your friends are not paying attention. They trade into termination conditions. Seek help immediately. Guys, this was done tongue-in-cheek. But it's very true. And if you ask anyone that's been trading any amount of time with Nexgen, It's unbelievably true. Make this your background. It'll help you. All right, I'm going to tell a quick story and then I'm going to take a break, and then the last hour belongs to you guys. So John Novak talked to, it would, right? John Novak talked to a broker once, and the broker told John, he goes, hey, John, I can guarantee you $1 million in your account by the end of the year. To which John Novak replied, that's amazing. How do I make that happen? And the broker told him, he goes, it's easy, John. He goes, I need you to fund an account with $3 million, and I want you to fight the trend every chance you get. By the end of the year, you'll be down to $1 million, if not less. And it's kind of a joke, and it's kind of funny, but there's an awful lot of truth to it, guys. You have the advantage of recognizing where the market is likely to stop, where the market is likely to go. You have the advantage of identifying when the momentum is 100% in your favor. You have the advantage of identifying where it's likely to stop. Guys, you have all of these advantages at your disposal, and you've got a set of rules that have been proven to win more than they lose. The only thing left for you to do is practice the correct trades until it's the only trade that you take. I'm going to leave you with crude oil here for a minute, guys. I'm going to take a few minutes. We're going to come back. The last hour belongs to you. The last hour is for your questions. I'm going to mute my mic an awful lot in this last hour unless you guys keep me busy. Back in a few, guys. All right, guys, last hour. Here we go. Remember, it's Friday. I want to do something. I want to find the best of the best, highest probability, nothing in the way, perfect trade. And I want to talk about stop movement, stop placement, and we're going to take a series of pictures for you guys because I've gotten a lot of questions lately. It is Friday, isn't it? Let's just do this. 9:51. So I'm going to come through. We're going to have a little stop movement lesson. Let's just find one that looks like a perfect high probability trend trade. All right. Guys, we're going to take a series of pictures. And we're going to talk about stop movement, stop placement. And this is going to be for a very mechanical, very methodical, no thoughts, no opinions, management plan. So I'm going to take my first picture, okay? And we're going to clearly define a management plan. If this is your entry, so we're going to say entry at 92.50. Are you guys with me on why we would get in there? Initial stop, 12 to 14 ticks away. So my initial stop, 92.50. It's going to be about 14. $14 ticks above the entry, beyond the window of opportunity. Are you guys with me? Here's our entry. Here's our window of opportunity from the highest point of resistance to the lowest point of resistance. Our stop's going to go above that. Guys, this is a pretty big stop initially, right? All right, so let's take the next picture. And I'm going to use this call out button. Price moves in the direction of my trade. Stop is moved 2 ticks above the reversal bar. So there's our entry. And then here's our new stop. You guys with me so far? This is the mechanical approach. My first target from 92.50. Gosh, I didn't get the picture as well as I could have. There's our initial stops. So now let's talk about targets and when we move stops if we are on that very mechanical approach. There we go. Now we can see it. I'm going to put our rules up one more time so that we're with it 100%. 92.50, so at 90.50, first target $100. When reached, stop is moved to break even. So when price hits that first one, that is the first time that I move my stop to break even. At this point, I won't move my stop again. The only outcome is either second target hit or break even. Are you guys with me? We enter the market, stop goes where the market shouldn't go. Market moves in the direction of the trade, stop is placed above. Let's do this. We have a $100 target. We have a $200 target. When the first target is reached, stop goes to break even. And at this point, the only potential outcome is it either hits my second target or I get stopped out break even. So Makamas, what part are you struggling with? Let's run it through this way. Rules are met. Are you ready? Let's go through the whole high probability trend trade entry. The rules on the 13.2 are met. Are you with me? So we're looking for an entry on the 5.1. Guys, what do we need to pick our window of opportunity? What are we waiting for on the 5.1? There's our reversal bar. Signals the beginning of a pullback. My window of opportunity is really going to go from this mid-band up to those 1-to-1s. Give me a Y in the room if you're with me in my comments. I don't know where the market is trading. Cool. So this line, I'm going to put right there. That's my limit order. I'm waiting for the market to come to me. I'm not going to the market. And the reason I put it down here is these triggers are coming down. This mid-band's coming down. That mid-band started to get low. I'm going to go to 92.25, just below it. Market's coming up. Look at this, guys. Pow. You're in the market. Your initial stop from 92.25, if it's 12 ticks, guys, 95.25, isn't that just below resistance inside of favorable large triggers? Sometimes you have to risk a little bit more. Guys, you have to determine whether or not that's okay for you. So here's your stop. It's red. We're in the market, 92.25. Everybody feeling good so far? My first target is at 90.25, $100. Whoops. My second target from 92.25, I'm looking for 98.25. Gary, there is no 8 range. There's no such thing right now. The only thing there is a 13-2 with the rules met. And there's an entry at the lowest point of resistance inside of favorable large triggers. But I know what you're saying. Entry. Initial stop. We're going to label it. Target 1. Target 2. And there's our management rules just for clarity. Are you guys with me so far? Cool. All right, so price is in, right? What do we need to move our first stop? Remember, the only thing we're moving first is our stop. What do we have to see, guys? New guys, help me out. Oh, it's going against me. I'm so nervous. Should I move my stop? It's still going against me. I'm crazy nervous. Guys, what do you think? Stay in or get out? Should we ditch it? Seems like grade A baloney to be in this trade, doesn't it? No, it doesn't, because there's my upper window. I knew getting in that this is my area where the market is likely to continue, and because of the odds favorable momentum, I'm not willing to hope it goes to the higher one. Up, there it is. There's our first reversal bar. 1, 2. All right, so I'm going to take a picture here. Let's put our rules up. Do I have a highlighter? I think I have a highlighter. So what part are we on here? So move 2 ticks above the reversal bar that goes the direction of my trade. You guys see it? Nothing else to do. My initial stop will be 12 to 14 ticks, adjusted or below or above the window of opportunity. When I get a reversal bar in the direction of my trade, I'm 2 ticks above the reversal bar. So guys, what are we looking at? We're looking at our stop. Whoops. There's our new stop. This is still our entry price. Target 1. Target 2. So far, so good? Guys, I hope you're stealing these. I hope you're not just looking at them. All right, so here we go. I don't do anything. All right, guys, there's our first target reached. Gonna do it again. Where's my highlighter? I will take profits on my first contract at $100. Oops, you know what? Let me retake this picture. There we go. I will take profits on my first contract at $100, and I'll move my stop to break even. First target hit. $100. And guys, I will not move my stop again. Either my second target is hit, or I am stopped out for a break even. Here's that next one. And how'd we do on this trade, guys? Second target hit. Guys, I know this seems silly and it seems remedial, right? Why is Mark doing this? Why is Mark breaking this down so simple? Because guys, you're going to get great at entries really fast. And you're going to need to learn to manage them. And until you learn to read your indicators, these become difficult to manage because you overthink it. So what I want you to notice, my initial stop is mechanical, guys. There's no thoughts, no opinion, nothing. My entry is rules-based, 100%. No opinion, no emotion. I'm simply following a clear set of rules. My targets are predetermined, so I'm not worried about home runs. I'm not worried about runners. When the trade moves in the direction, it's mechanical, it's thoughtless. I move my stop because my rules tell me to move my stop. My targets are established. There's nothing else for me to do until I'm either stopped out or until my target's hit. Let me put that on there. Nothing to do now. I'm either stopped out or my first target gets hit. That's it. Let's make that a little bigger so you can see it. Maybe. I'm struggling here. My first target gets hit. What just happened there? There it is. My first target gets hit, $100. I'm now break even. Will not move my stop again. Either my second target gets hit or I'm break even. Then the second target gets hit. Out of trade with $300 winner total. What do you think, guys? Does that help? Does that help keep it mechanical? Do you see how this can be advantageous in the beginning until you learn to recognize where the market is likely to go? Whoops. Until you recognize where the market is likely to stop, taking that emotion and fear. I'm going to see how many times I can mess that one up. me delete that one too. Did I lose you guys? Did that get too boring? Not exciting enough to learn how to manage your trades? That's okay. Because I'm keeping it mechanical, Alex. Because in the very beginning, remember, Alex, that this trade, this high probability trend trade, this management plan is designed for brand new users to give you the best chance of success. If you win $100, Alex, and you know that you can't lose, if you know that your worst case scenario after that first target hit is a break even, doesn't it make it easier to hold for that second target? My first target's hit. I'm risking absolutely nothing. I'm more inclined to not interject emotion into the management of this trade because I know that I can't lose. I don't care. I'll go to the bathroom. I'll walk to the kitchen. I'll pour a cup of coffee. I'll start making a sandwich. It doesn't matter. Nothing bad can happen to me. And I know that I've entered the trade with every advantage. So Alex, if I keep that stop up here, I've got all this space to insert my emotion. What if it ticks up a couple bars? What if it ticks up a little bit? What if it almost gets me and I get scared? Eventually, Alex, you'll have a plan. You're further along than the average person. Trailing behind this reversal bar, because that's a 3-tick fluctuation in price. It's going to happen. Behind the reversal bar marker, saying that if a reversal bar prints, I'm out of the trade. You can do it if you want. So let's see if we can find a reason why that's detrimental. Alex, let's say just for grins, this was your perfect long and everything was clear. Everything said this market's going up to this area of resistance. You had every advantage and you put your stop on a reversal bar marker. Yeah, it stops you out with every advantage. If you're in a long trade here and everything's going up and everything says this market's flying to the upside, how upset would you be to be pulled out by a reversal bar marker? By a reversal bar when your large chart said we were going to the next area? When everything said this market was going up, and your fear of giving back a couple ticks costs you the entire move. So that's what this is designed for initially, Alex. And you may, and let me throw this out here. When price reaches resistance, but I think it may break, I love a reversal bar marker. I'll force it to take me out. But if you have clear sailing, if you have nothing in the way, if you have every advantage, the market is an expression of fear and greed. It may give you a reversal bar marker when everything says you're going up. And I know this because I've been stopped out, Alex, on reversal bar marker stops more times than I care to admit. So for me, stop behind a pivot, and I don't move that stop until the next pivot if I'm holding for big moves, or if I'm being mechanical, above the window of opportunity, above the reversal bar, break even and leave it the hell alone. But when I'm looking at trailing, Alex, if I'm looking for a bigger move, reversal bar marker is too tight because the market fluctuates. If this is my initial stop below the pivot, it is, Gary. If my initial stop is below the pivot and I'm holding for a bigger move and I'm not going break even because I know I have every advantage, my next stop goes behind the next pivot, or it gets moved behind the next pivot, gets moved behind the next pivot. Rather than worrying about these little fluctuations on a smaller, faster chart, I'll utilize pivots on the 5-1 as I continue my trek to that next key area. Does that make sense? Ben's probably got amazing examples of that in his pictures. This trade from earlier, if I had put a reversal bar marker, I would have been out of this trade instead of taking profits at the fib. Does that make sense? I was in, it was perfect, every advantage, minimal risk. When my first profit target was reached, actually I didn't move my stop because everything said go up and no divergence. But then when it pulls back and then gives me a reversal bar, that's when I move my stop behind it with everything saying up. It just works for me. You'll develop a management plan that works for you, right? But until you come up with that clear path, until you come up with that plan that makes you happy, I'm just kind of giving you a little mechanical approach, something that keeps the emotion out, something that keeps you focused on only moving stops when they need to be moved because of a mechanical, not because of an opinion, has nothing to do with chart reading. What do you think? Hopefully that works. And yeah, Gary, you'll be able to see this one on YouTube. After I shut it down, it'll go through. You'll be able to find it in the live section. Guys, go back and watch some videos this week. You go to the Nexgen channel, if you go to the live selection, I forgot to do it yesterday, my bad. All of these are live classes. You're very welcome, Alex. And I think that's a great question, and I'm glad that I had an answer for you. And what you'll find, guys, is everything's going to evolve over time. Your entry is going to evolve over time. Your exits are going to evolve over time. Your willingness to hold a trade, your willingness to not hold a trade, whether or not you'll take a 50-50 trade with no divergence and get in and then manage it assertively, whether or not you'll take a high probability trend trade even if the triggers are split. Guys, you're going to do so much repetition, so much study. You're going to fill that spreadsheet over and over and over. So as you work on a management plan, catalog it. As you begin to recognize what's a favorable large trigger, well, there it is right there. That's my best look. Catalog it. When you open up and you look at your library, this only has 2,000 pictures. Guys, I deleted about 5,000 of them when I updated to the new Snagit. It got rid of about 5,000 pictures of mine. I've got 7,000 pictures under my belt. 7,000 ideas of patterns, of management, of entries, of exits. I can open up my charts and within a fraction of a second know whether or not my rules are meant for a trade. You'll get there too if you stay the path. Pretty cool, right? Now you have a 50-50 trade with divergence, don't you? The smalls have broken through the area, but the large have not. I've got a small window of opportunity, but I have a loss of momentum on my 5-1. What does your plan say about taking an entry at the area inside of favorable large triggers? If you haven't written out the plan, write it out, guys. Some people are thinking right now, well, Mark, it's coming from a good top. I like it. I've got a termination condition that created a full reversal. Some of you were saying, well, Mark, I'm trying to be as consistent as I can right now because I'm not winning money every day. So I'm going to pull this medium probability trade with a loss of momentum out of my quiver for now. I'm going to watch it. I'm going to take pictures of it. I'm going to annotate my charts. Hell, I'm even going to post them in class to see what you think about the way I'm reading my charts. But because there's a loss of momentum on a 50-50 trade, it's just not my trade yet. But it doesn't mean that it won't be one day. And guys, I watch a lot of these go without me because I don't care for the loss of momentum on a 50-50. It doesn't suit my needs. Might be yours. Missed your entry by a tick on the first pullback. Waiting for the second. No trade for you now. And this may be one that you manage assertively. You get in, you get to break even. You identify your first trouble spot, maybe that divergence low. If you're taking quick profits, you've already got them. If you're in at 30, there's your $300. It's not a high probability trend trade, guys. There's a boatload of advantages. But because of the study that I've done, because I've written out a plan, and my plan says on 50-50 trades, no divergence will be present, I am obligated to not take that trade, no matter what happens. You got to be okay with that. You have to be okay with not catching every move. You have to be okay with sitting on your hands when your rules aren't met. And if you took it, you have to manage it. Now you've got two divergences. Now you've got smalls inside of the large. You're still on a 50-50, right? Yep. That's it, Gary. If you lose 75%, there's no advantage to be had there. But you have to do a little study to recognize it, don't you? Gary, didn't we all take 50-50 trades with divergence in the beginning? Woohoo, I'm in a trade. I did it all the time. You just have to decide what suits your tolerances. What makes you feel good about an entry? Because guys, if you don't feel good about an entry, if you don't trust your entry, you're going to manage it scared. It's like going to Vegas and owing the mob shark, or what do they call them? Loan sharks. You owe the loan shark $100,000. You make poor choices in your gambling to try and pay that back. You start hoping it goes so you don't get your knees broken. And there it goes, right up beyond that window of opportunity. Two divergences on a 50-50 trade. It's taken you out of the high probability realm. If you took the first one, you may have managed out with divergence. If you took the second one, you may have managed out with the second divergence. Hell, you might still be short, just hoping that thing goes down. That's a horrible management plan, guys. All right, what else do we want to talk about? Yikes, how about this? Guys, get some reps this weekend. Brand new users, get in there, take some trades, practice your management. Experienced traders, learn how to squeeze that extra 20 cents out. Use your market flow, guys. Or your market replay. You do need the patience of a deer hunter. You're a profit hunter. I don't know. Let's find out. In the Snagit library, let's see. There's all files, images, videos. I'm going to go File. I'm going to go New Nope, that's an image, that's a capture. If I right click, all right, George, don't you tell anybody that I did this. I'm going to go to help. And I'm going to go to tutorials. If I lose my man card, this is on you. You're going to have to explain it to my wife. So here's an awful lot going on in there. Probably have an answer. Manage the library. Merge libraries. Goes into the cloud. Check it out. I do know that from the screencast page, you can definitely make folders in there if you want to. I tend to not do stuff like that. It's just me. I try to keep stuff so simple. Guys, I'm not a super tech guy. Check it out. 50-50 with divergence. Didn't work. 50-50 with divergence. What are your odds, guys? You've got a window of opportunity, right? Can we consult the higher chart? It says weak triggers right at resistance. Let's see if that one works. Absolutely, George. And if I come up with an answer over the weekend, I'll send it to you. Because now the way my brain works, I'm going to have to look for it. Good stuff. Guys, I think that's it for me today. 10 minutes early, okay with you guys? Are there any questions that I could answer for you? Is there anything that you need a little help with? You take pics with capture and then save them in your computer. I like that, Alex. I keep all mine in the Snagit library, or they go to screencast. The problem is I don't save everything to screencast that I take a picture of. So, absolutely. Guys, it's been a good week. It really has. I think there's been a lot of learning this week. It's snowing in Chicago. You can have it. Guys, it's 59 and cloudy here. All right, Shane, that'll get me. And guys, also, just so you know, if you go to the resource or the contact us page, I like that, Alex. You can get me on email. And just a heads up, guys, I don't access my email from outside of my computer. So if I'm out and about, I don't get it, which means that if it's the weekend and I'm not working, give me a little time to get back to you. You can also get me on Skype if you want. Add me. I'm glad to talk to anybody. I've got people that I've been talking to for years on Skype that use the software. I get new people looking for a little bit of help. I'm always glad to give it. Don't be afraid to reach out. I don't give trading advice. I love to take a look at your plans and give input based on my experience. I won't tell you what you should do. I won't tell you what you should do with your money. But what I will do is I'll have a very honest conversation with you every time you present something. NG time. How do you catch that early? NG time. There's a set of rules for it. That's the best answer. The short of it is when you have a termination condition on every chart and price gives you a full reversal bar. on your 13.2, which it has not at this point. By the time that full reversal bar happens, things begin to roll. Your best opportunity for being first in G time is an HVA trade. But then I'm going to throw it back at you. If you're not making money consistently every day with the high volume or with the high probability trade, don't try to add the aggressive trades. It's just going to kill your P&L. Begin to study the HVA trade. Take pictures of it, post them in class. We'll talk about it. I love the HVA trade. I think it's a super effective trade. But what it does is it requires a level of patience. It requires these triggers to roll to get the best of the best shot. And guys, that's it for me today. It's been a great week. Thank you everybody for the participation. Thank you all of you guys that have been posting pictures, asking great questions. If you're with me on demo, I know that we have some demo people in there. Guys, take this weekend. There's a couple really important questions that you have to ask yourself when you're on demo. Do I see it? Do I recognize the advantages? Can I do it? Guys, I'm watching everybody in this room do it. You can do it if you put the work in. You definitely see it. Fibonacci works. And with a little bit of help and a lot of study, guys, you can get exactly where you want to be. Make that commitment. Reach out to your salesperson. Tell them you want a Christmas deal, but buy that software. Commit to it. Make it yours, and then you don't have an out. You don't have that parachute that says, well, if it doesn't work, it doesn't work. Because it does work. You just have to work it. And Shane, dude, you're welcome. You're very welcome. I'm going to throw that thank you up one level to John Novak, who taught me everything that I know, and he's been so patient with me. And that's hard to do with your little brother when you're teaching him the software. No doubt in my mind. All right, guys, y'all be good. Gary, it is recorded. It is on YouTube. I'm going to